Let's talk about the commodities now, where we have seen some dip coming back in case of the gold prices. We did try to go up to that 1270 mark in the Asian markets today, but from there nearly $13 down in the European markets right now, and the rupee is appreciated a bit, and that also has led to some declines coming in for the Indian market, so it's negative for both gold and silver at this point in time. Take a look also at the crude oil prices, where you have seen the prices come off their highs, 108 just about holding in case of the Brent crude prices. It's the Indian markets which have come back around $6,100 per barrel as well. So bit of better going into that space. Let's get in then. Jagdeep Grewal, he's VP Commodity and Research at Kumar Group, and he joins us for this leg of the show. To you first then, Jagdeep, what's your sense really coming in for the gold and silver prices? Because there was some safe haven buying that we initially saw after the Fed tapering, but since then it really hasn't seen any follow-through buying coming in.
Say gold and silver for the time being, say for 1 or 2 days, I'll not take a buy bet, but for medium term, certainly the safe haven buying is still lucrative for the gold and silver. Earlier we were thinking of after tapering, the liquidity when will be squeezed. Certainly the safe haven demand for gold and silver will vanish, because tapering will occur when the economy will revive and all things will be in the place. But as the tapering is happening, apart from US, we are not getting any sort of positive data, particularly emerging countries. We are getting all sort of negative indicators, negative senses of growth. Certainly against the PMI data of China came negative, when we are seeing the tapering of the Fed stimulus. So for the longer term, or say for the medium term, I'm bullish for the gold, while for the short term, 1 or 2 days, I'll take a dip for the profit booking what it had gained from 1180 to 1270. It'll take some rest, and as you said in the introductory lines, that China Lunar Year demand, which was expected to be good, because in the beginning of the year Chinese buy a good gold amount, but this time it was not seen as much as it was expected. So bit of fit from that side also. For the short term, 1, 2, 3 days trading sessions, yeah, profit booking will be there, but for the medium term, I'm a bit bullish for the gold and silver.
Fair point. Vijay, what's your sense now coming in for the prices? Because it has been choppy at its best, 30,000 rupees, still a resistance coming in for the gold prices, whether it's near term or longer term. How are you looking at that?
Manisha, if I'm expecting a bias towards unwinding, which I am seeing on screen, and I have been talking about how traders are not showing any signs of being in a hurry to buy for the fear of paying higher prices in the next hour in the next trading session. Unless that really comes in, I don't think there's a secular and sustainable uptrend coming in the absolute near term. Over a period of time, towards the second half, or probably end of 2013, I think I would be far more favorably poised towards bullion, especially silver. For now, I would want to bet that gold is likely to see 29,250 odd levels in case the decline persists. The 30,100 level, give or take 100 rupees here and there in either direction, is likely to remain a glass ceiling, and going past this level will be an effort unless some new data points from the economic front emerge to counter such a hypothesis. I would still remain a buyer on silver at 42,000 to 42,500 band in the physical segment. I would completely avoid the leverage space because I'm expecting unwinding there.
Fair point. Take a look at the energy space as well, and that has seen some support on the back of decline in energy products. You also have seen natural gas prices run up quite strongly. As we end this month, we are nearly 25% on the higher side for that commodity, Vijay. How would you look at natural gas now? And is it looking overbought in the charts the way it has been performing for last 4 months?
Manisha, it's gone into the overbought territory, but persisted there in the absolute near term. And since the time it was approximately 255, 260, I remember talking about the 306 level first as a threshold, and then the 340, 345 band as the next resistance point. I think relatively speaking, natural gas is better poised as compared to crude oil. And at this point in time, I would maintain my view that the 308 level is a level where there is an ample amount of support likely. And as and when the prices approach that point, I think there would be fresh buying emerging. The 345 level for me remains a resistance at this point in time. If I see prices approaching there or reaching there, I don't mind taking a high risk approach towards shorting in very small quantities, especially with a view to exit. If I was to get an entry at 345 odd levels in the short side, I would clearly exit this short position with a 10 to 15 rupee profit as and when I get it.
That's about the natural gas. Jagdeep, how are you looking at the crude oil prices? Because there has been some support into that one, and the month of Jan really seems to be ending on a positive note for this space.
For natural gas, weather is supporting, and still there is time for the weather to remain cold. So I'd go with the second thoughts. I will second Bambaniji. At the levels of 315 and 310, in between that, I'll take a buy call if at all it comes down. But resistance levels with 350 and 355. From there, I don't expect much of the rally from above these levels. So at these levels, certainly its rally may end up, and the correction would be good, because the weather conditions would not remain for the much longer period of the time. It is a short period for colder weather. Now, as and when weather will become to normal, certainly the prices will wind down. So for the shorter term, I am bullish. For the after 10 or 15 days, I'll take a call for the sell.
It has been a day of more gains than losses in the agro space, starting with the wheat prices, and you have seen nearly 0.25% of a gain coming back for that one. You have seen support coming in for other commodities as well, especially the edible oil space. If you look at the soybean and the soy oil prices, there has been buying coming in for that one in the international space and reflecting in the Indian markets as well. On your screens, nearly 1.5% of gain coming in for that one. You have seen some support continuing for the chana prices as well. The pulses also, remember, in the recent days have been doing positive. Vijay, first of all to you, what's your sense now coming in for the chana prices? You have been advocating a buy onto that one, but we have seen some resistance hitting onto that, nearly 3% down in the futures right now.
Absolutely, Manisha. I have been talking about bullishness in chana come April 2014. Similarly, with sugar, I've been talking about bullishness around April 2014 also. But in the last 3 days, I've started veering around to the view that there is likely to be a beta pro-cyclicality in the markets, where you're likely to see an unwinding bias and a flight towards cash or flight towards liquidity. I'm seeing signs where traders are unloading any and everything, especially in the leverage space, and running for cash. Now, once that happens, I think all your hypotheses, all your theories, all your trading models will go out of the window, and that's precisely what you're seeing in chana prices. I think the 2,891 closing in the February future series on the NCDX clearly tells you that chana has now approached the oversold levels, but I would not be surprised to see chana prices remain in the oversold levels for quite a while. Ditto with sugar. I talked about 2,700 as a support. It's violated that support and stayed below it comfortably. My guess is bullishness and signs of aggressiveness from the trading fraternity, especially on the long side, will not be forthcoming in the absolute near future. So I would lay my hands off, and I would basically defer buying decisions, if any, for now.
Okay, yes, it has been a weak spot when it comes to sugar and especially chana in the markets today, but edible oil space, and that has done good. And Jagdeep, what's your sense? Would you go out, buy at these higher elevated levels?
No, for edible oils, certainly a trend is downtrend. If we see towards the production data and the demand, China has gone off for the 6 next days, and China is the biggest driver for edible oils, next to India for the soybean oil particularly, India particularly for the palms and other products. For soybean oil, I take a sell call at these levels, 687 with the targets of 678 and with a stop loss of 692, 693 levels. So I'll take a sell call for the soy oil particularly.
Jagdeep, what's your sense on the spices area? Because that had been the gainer in last few days, and we've seen yet another day of a circuit coming in for the cardamom prices. Jeera, of course, has been declining, but we've seen turmeric and cardamom do quite well. Do you have any positions or strategies into these?
For cardamom and turmeric, I'm still a good positive stance. For turmeric particularly, if you see, the volatility is quite high. So with the stop losses not less than 200 to 50 rupees, I'll take a call. If crosses 7,500 to 7,800 prices can touch. And for the cardamom, I'd say we should wait for a correction of 2 to 3%. Then a up move off from there up to 5%, 6% is on the cards.
Okay, so bullishness can be continued in case of the spices space, but look out for chana, edible oil and sugar. That is something that of course has been on the choppy side. With that, Jagdeep and Vijay, we'll let you go. Thank you so much for joining us with your strategies.